from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it is the biggest ever takeover of a private software company. Adobe has agreed to buy the software design startup Figma in a deal valued at $20 billion. We're going to hear from executives at both companies in an exclusive interview. Plus, the merge is here. Success. We're going to hear from an Ethereum core developer about whether it's all going to plan and what is next. And climate tech investor and entrepreneur David Friedberg is with us. You might also know him as a bestie on the All In Pod. We'll ask about his new SPAC, today's big tech M&A, and Elon Musk. First, though, I want to get a look at the markets with Bloomberg's Ed Ludlow at another seesaw session, tech lower. Economic data at the heart of it. Tell us what's going on.
Yeah, and it was a mixed bag as well. Data showing that perhaps demand for jobs is holding up in the US, slightly softer retail sales, and all at the same time factory output increasing. Why do we care? Because we're trying to look for signs in the market about what the Federal Reserve will do next Wednesday with rates. The NASDAQ 100, a real underperformer, down 1.7%. Both the NASDAQ 100, a tech-heavy index, of course, and the S&P 500, the main gauge of US equities, at their lowest level since July. At the same time, you see semiconductors weaker while yields push higher. I want to bring you some breaking news, that we got after the market closed. FedEx has scrapped its full-year earnings guidance for 2023. FedEx, not a company that you and I usually track, but look below it. That's why we care. Amazon down 2% in after hours. There was a feeling that actually Amazon would be resilient in the second half of this year because it's been putting in place cost-cutting measures. There was some hope that the consumer, particularly in the US, would remain resilient. But in FedEx's earnings statement, they said that actually, while they have also cut costs, there's a real slowdown in activity from the consumer globally. So lots of conversations to be had in the next 24 hours about what that means for Amazon at a time where we're positioning ourselves for the holiday season. We're also thinking about crypto, of course, and Ether lower on Thursday, bringing other digital currencies down with it. The Merge, I know you're going to talk a lot about this during the show, but there's a feeling in the market that this was a sell the news event on finally the Merge happening, the major upgrade to the underlying network behind Ether that we've been waiting so long for. There's only really one stock that I was tracking in the market on Thursday, Adobe, buying Figma for a $20 billion deal, stock and cash. That chart says it all right. That's the market reaction. Really big drop in the stock. And analysts basically saying this was expensive. They paid a lot of money for this company. It was defensive. This is them going out there trying to do something, and there's execution risk for Adobe as well. And I think you might have a good guest to talk to about that right now.
All right, Ed Ludlow, thank you. Another headline and some other stories we're following now. A number of social platforms will announce new actions to combat hate crimes and racially motivated violence at a summit hosted by President Biden at the White House. Representatives from Instagram, Facebook, Twitch, YouTube, and Microsoft all planning to attend. The company's new efforts will be unveiled alongside a package of federal initiatives to design and address hate-fueled violence. Meantime, hundreds of workers at an Amazon warehouse in Coventry, England, are now striking over pay. They've been threatening strikes across the UK after a major rise in the cost of living. Any action to protest against the company's pay packages would likely take place in November, according to the union. And the UK will open an in-depth probe of Microsoft's planned $69 billion purchase of the video game maker Activision Blizzard. Regulators saying the deal could hamper competition, and that Microsoft turned down the chance to offer remedies to address its concerns. If the merger goes through, it'll make Microsoft the world's third largest gaming company. We're going to be right back, bringing you those exclusive interviews with the CEO of Figma on the back of that deal. Coming up next. This is Bloomberg. A Brazilian agriculture company is planning to list in the U.S. via SPAC with the help of one of the most prominent climate tech entrepreneurs. Lavoro helps farmers boost production by offering a suite of key ingredients like seeds, fertilizer, and more. I want to get right to David Friedberg now, a longtime founder turned investor focused on climate technology, the CEO of the Production Board, which just merged with Lavoro, as well as, you might know him as the co-host of the All In podcast. David, so great to have you with us, big listener here.
Thanks,
Talk to us about the thesis behind this SPAC deal. Why SPAC? Why now?
Yeah, so we set up the SPAC about a year ago specifically to do a strategic transaction, meaning we were seeking a business that operates at scale in a market that we know well, food, agriculture, biomanufacturing, life sciences, and where we believe technology that exists in our portfolio of businesses could be additive and accretive to their operations. And we know ag very well. Came across Lavoro, which is the largest ag retailer in Brazil, leading ag inputs retailer in Latin America. And this business really has an incredible opportunity to transform how farmers farm in this market. And Latin America is the largest ag export market globally. It is the largest provider of calories around the world. And so this is a massive opportunity because farmers locally in that market don't utilize the best technology. They don't have the greatest productivity, which is yield per acre. And using ag retail, we can actually access that farmer and really transition them to new technologies like biologics, software, and other tools that can massively improve their productivity. And that results in more calories, more sustainability of food production. And it's so impactful because this region is so important globally right now.
So I'm curious about the decision to do a SPAC in general when they've been under a lot of pressure. You know, they've almost disappeared in the last few weeks. Why do you choose that? Why did you choose that as the vehicle?
Yeah, so we set up a SPAC last summer. And so we've been, it's the only off-balance sheet vehicle we have. The rest of our operations at the Production Board are all balance sheet driven capital. And we build and invest in businesses off our balance sheet. And we did this specifically because there were public market investors that were interested in partnering with us. And we thought that this could be a really great mechanism to find a business that we could be useful to. And that's exactly what we're doing. So we're actually investing $100 million off our balance sheet into the transaction. And several of our businesses are going to be partnering with Lavoro in the future, we do hope, as a way to bring new technology to that important market. And so this is a really great strategic vehicle, and the SPAC is really just a mechanism for doing that and for getting a meaningful ownership stake in a business of scale. I mean, this business, as we show in the presentation, should do about 1.6 billion top line this year, and is doing about 172 million pro forma adjusted EBITDA this calendar year, growing to 277 next year. And so it's a business of scale, it's profitable, and I think that there's a real way to drive further margin improvement and further revenue growth with some of the technologies we can bring to bear here.
Talk to us about deep tech investing, which has been your thing for so long, how it's different in a bull and bear market. You know, obviously these are companies that need funding, but it can be a harder sell when times are tough.
Yeah. So it's exactly, I mean, what you're saying is exactly right. I mean, deep tech investing typically invests on a milestone-based program. So you look at some technical breakthrough, proving something works, and then you raise more capital, and then you prove that the next thing works. And eventually you have a product, and eventually you can sell the product and make the product, and eventually you can scale into the market. And so that takes several years, and capital needs to be unlocked in milestone-based increments. In a market like this, where you can buy US Treasuries and make 4%, or buy a great stock that's got a 5% dividend yield and it's a growing business, it's really hard to find capital into highly speculative long-range investment cycles. So the interest rate environment really challenges deep tech. And it really challenges, and I think we've particularly seen it of late in the biotech market. I don't know the latest statistic, but as of a few weeks or months ago, biotech, roughly 40% of public issues were trading below cash. And so I think it really speaks to the challenge that deep tech businesses face. Now, what we're doing with Lavoro as an example, and what I think happens often nowadays in biotech and will continue to happen with other more deep tech investing cycles, is to partner. So you partner with the large business, you partner with the business that has scale, reach, distribution, cash flow that can really benefit if your deep tech pursuit unlocks some value or some opportunity for their customer base. And so I think that's what we'll see more of likely going forward, less of the VCs making big check investments early stage, hoping for something to hit, that you'll likely need to see much more strategic partnership happen to get these things across the finish line.
I'm so curious what you make of the Patagonia founder giving away his company to fight climate change. What do you think about it? And is that something more Silicon Valley founders and CEOs should be doing?
Yeah, he's always been an interesting guy. He operates his business in a different way than I think a traditional capitalist thinks about operating their business. And so, it doesn't seem surprising knowing the personality and the way he's talked about things in the past and the decisions he's made. I mean, I think he kind of banned putting financial services firms' logos, as part of their custom embroidery programs that they were having for a while, a few years ago. And look, I mean, it's going to go into these blind trusts, into these irrevocable trusts. And I'm sure that the stewards or the trustees will continue to operate this business in a smart way. I doubt that the trustees are going to basically shred the thing and give it away. I'm sure they're going to continue to run the business, and that the dividends and the profits generated from that business over time can be used to fund, initiatives in climate change mitigation, and I think that that's a very noble way to transfer the ownership of your business, rather than just give it away to a bunch of NGOs and nonprofits. Let the trustees that you know and trust operate the business for you that can generate cash and value over time, and then decide where that cash and where that value should be allocated to really drive impact in the world. So it's a great, noble decision, and really fits well with the way he's talked about what he's done in the past.
Meantime, I gotta ask you, since the Twitter Musk dispute has been a running topic on your All In pod, you interviewed Elon Musk at the All In Summit. Do you think this deal goes through? Does Musk end up buying Twitter? And if so, how does that change the social media ecosystem?
Yeah, I think, look, there are probably two key things at play here. The first is, what ends up happening in the courts as they go through this legal process. And I saw a great post by a legal analyst a few weeks ago, and I wish I could remember the person's name and reference them. But they said, the Delaware court there, the Chancery Court, is less likely to try and force a deal to close, because then if the parties don't actually close the deal, it really damages the reputation and the integrity of the court. And that there's a case to be made that Musk would just simply say, no, I'm not closing. Do what you want. Give me a fine of $1 billion. I don't care. I'm not closing the merger on these terms. And so this legal analyst pointed out that it's unlikely that they'll close the deal on those, or that the court will try and force the deal. And I think on the other side, he saw value in the community. He saw value in the user base. He saw value in the social network. And I'm sure he still does. And regardless of what he's identified with respect to the bot problem or the spam problem, as he calls it, that there must still be value there. So I would say that based on those two conditions, there's probably a bid-ask gap that maybe gets met still. And I would envision that there's still a motivation to do something here that is probably a function of the true size of the true network of users on that platform, because it is such an important platform. Deep down, he probably still really wants to do something. And on the other side, the court may end up saying, hey, there's some way that we're only going to charge a fine here, which forces Twitter back to the table to negotiate price, and maybe something happens. So, that would be my middle of the line, kind of middle of the aisle here kind of decision or perspective on what might end up happening over the next couple of months here.
All right.
So we'll see.
We'll be listening.
Yeah.
We'll be listening to the podcast for more commentary. Dave Friedberg, great to have you with us. Thank you so much for stopping by. We'll be right back with more of Bloomberg Technology. This is Bloomberg. Let's get back to that Adobe deal to buy software design startup Figma. This deal, valued at $20 billion, is the biggest ever takeover of a private software company. I want to bring in Figma's co-founder and CEO, Dylan Field now, as well as Adobe's president of the digital media business, David Wadhwani, for more on this historic deal. Exclusive interview. Dylan, kind of the Silicon Valley dream coming true here. You stick with your initial idea, you develop it for a decade, you sell it for billions of dollars. There are still people out there asking, $20 billion? What do you think is the potential here, and why is Figma worth $20 billion?
Well, first of all, I just want to give a giant shout out and thank you to the Figma team. I am on this interview today, and there's so many other people that have been involved in the success of Figma along the way, past Figmates, current Figmates, and I want to thank all of them. Of course, this is about moving forward now and how much potential there is in a combined Figma Adobe combo. And we really believe there's such potential here, whether it's looking at Figma and thinking about how we can accelerate our efforts with FigJam through Adobe Acrobat and their giant install base and their productivity case there, whether it's about the Figma design platform today and how we can bring capabilities from Adobe in, whether it be imaging, vector illustration, video, 3D, or more, or it's thinking outside the box where we're currently at, thinking about developers and thinking about markets we're not serving and we were not planning to serve, such as creatives, and thinking about how do we bring the capabilities of Adobe onto the Figma platform and make it so that creatives are able to have more collaborative workflows, make those workflows web-based, and make it so that creativity, design, and software development are more accessible to more people. We're truly excited about what can become possible there in our combination with Adobe.
David, we all thought we were in a downturn, and here you are doing a $20 billion deal. The stock had kind of a rough day as investors digested the number here. What's your response to that?
Look, we at Adobe, we're entering our 40th year, and we continue to be very aggressive about the opportunities that we see. If you look at the opportunity ahead and what Dylan and the amazing team at Figma have built, they've built a company that's basically going to add $200 million of ARR this year, crossing $400 million by the end of the year, and addressing a TAM that's $16.5 billion. And when you put it in the context of the efficiency of the business, cash flow positive with a net dollar retention rate over 150%, there are very few companies with that profile. And in the context of what we see and some of the things Dylan talked about, when we look ahead and the synergies we can do to accelerate Figma's move into that $16.5 billion TAM, to accelerate what we do in terms of our core creative flagship applications, reimagined with the technology running on top of the Figma platform. And when you think about it in the context of how Dylan was talking about with FigJam and Acrobat, really coming in at that cross intersection of creativity and productivity, we think that the market opportunity here is massive, and this was a great time to make that play.
Dylan, there was a great tweet from Ruben Harris, another startup entrepreneur out there. He compared Figma to Instagram. Well, if you think about it that way, you hear the numbers that David just rattled off. You're cash flow positive. You could have gone public as soon as the window opened. Why sell? Why not try to build your own $150 billion company and go public on your own terms?
Yeah, I mean, first of all, we're super thankful that we had the ability to control our own destiny here. But at the end of the day, we have to think about our community. We have to think about the impact that we can have and what timeline we can have that impact on. And we believe that this accelerates the impact we can have, that this broadens the impact we can have. And by leveraging and utilizing the expertise of Adobe, the capabilities, the technology they built, as well as the amazing people they have and they've attracted over the past 3 decades, we think that we're able to basically scale the impact we have beyond just design and move into new areas and be able to have more impact faster. And that's why we've done this deal.
David, I know you were the architect of this deal, and you also sold a couple of companies, including one to Adobe in your earlier days. What kind of advice did you give Dylan through this process, personal advice in the best interest of, Figma and his company and not necessarily the company that you work for now?
Yeah, well, I think I look at it as a shared common interest and shared objective here. So, Dylan and I have known each other for a few years, and we started having this conversation in earnest a few months ago. Having gone through this process, being acquired as part of Macromedia into Adobe, the things I know are if you have shared purpose, if you have a shared passion, and you have a clarity in terms of how you're going to actually operate and go after the market, great things will happen because there's so much that we have in common in terms of how we want to approach the market. And Dylan and I have been very clear in terms of how we're planning to run this. Dylan will remain CEO of Figma, and he and I will be working very closely to make sure that the decisions that he makes with the autonomy that he needs to keep the things that are special about Figma special, combined with the things that we can do surgically to accelerate the business, accelerate our technology vision, and move into new markets. That's really the foundation. And the most important thing, and we talked a lot about this through the process, is shared vision and trust. And I certainly have a tremendous amount of respect for what Dylan and the team has done. And I think he knows me well enough that he knows that I'm a person of my word, and we're going to do great things together.
It's mutual, and it's really helped that we knew each other for a few years prior as well.
Dylan, Figma was making Adobe sweat. What's it going to be like joining your competitor, and how do you preserve the culture of the Figmates, as you say?
Yeah. Well, first of all, the more that we learned about Adobe, the less we thought about them as a competitor, honestly. Again, we're over here in the product design and product and software creation space, and Adobe is largely in the marketing space when it comes to digital media. And so we really see this as a way to broaden our opportunities. And also, the more that we got to know Adobe, the more we saw shared vision, shared purpose, shared values, like David referenced. At Figma, one of our values is build community. Another one's craftsmanship. These are values that Adobe has in spades. And because of the autonomy and the ability to continue to build our culture, our team, we really think that we'll be able to continue to accelerate our culture. And I'm very excited to explore what this acquisition means to the team and figure out how we can have even more impact on our community and our ecosystem. For me, I grew up using Adobe software, and so the chance to help Adobe think about the next generation of creative tools and how they are used collaboratively and what they mean in a web browser context, that's a dream come true, and I'm really excited for this.
All right, Figma co-founder and CEO Dylan Field, along with Adobe's president of the digital media business, David Wadhwani, thank you both for sharing both sides of it. All right, coming up, we are talking everything merge and whether Ethereum's energy consumption will truly decline by that estimated 99%. This is Bloomberg. Crypto's most important commercial highway, Ethereum, has just been repaved. The blockchain network completed the crypto world's biggest and most ambitious software upgrade to date. This, according to its co-founder, Vitalik Buterin. The upgrade is called the Merge and appears to be a sell the news event. Bloomberg's Shanali Bosick has been covering for this. And Shanali, have you been up all night long watching this thing happen?
I did certainly wake up at 2 a.m. to see what had happened. Yes, Emily. And while it was successful, remember, and also one of the biggest upgrades we've ever seen in the cryptocurrency industry, it is still the beginning of many changes for Ethereum ahead to get to those ultimate goals that Ethereum is looking for. So what is really changing? Now we are moving to this proof of stake model. We are moving over from that reliance on miners to stakers who are used to validate the chain and really start to expand other things that Ethereum is really looking to do, which is become more scalable, improve transaction fees and gas fees. But, that's not going to happen right away. There are things that you've seen Vitalik Buterin talk about today on Twitter that will start to get you closer to that, but there's still some concerns right now as we look at the merge and how the next couple of days and weeks work out. What are those concerns? Those include scammers potentially appearing and creating forks that look a lot like the Ethereum chain as it continues through the merge. And you're also worried about the impacts on the layer 2s that are tied to Ethereum. You're also worried about any unanticipated glitches that are not just tied to this particular merge, but the future upgrades, because those are the ones that are going to do the things that we want to see from Ethereum, which is improve those transaction fees and speeds. So when we take a look here to your point, you're seeing some pressure on Ethereum, but remember, this is not really all about the merge. This is also tied to a lot of other issues that are happening in the macro environment. The merge, while there were a lot of people buying it leading into this news, there was a lot of education that went around the merge in terms of, you know, the future for Ethereum and what it looks like as people really start to take to the staking model and really bake in the place of Ethereum, not just in the crypto community, but while we have all these other global issues going on that are headwinds, Emily, including a hiking interest rate cycle around the world that can put pressure on crypto assets, including Ethereum. So a lot still for Ethereum ahead. But again, the next few weeks will be pretty critical as people bake in this news.
All right, Shonali, hang on. I want to bring in Preston Van Loon now, Ethereum core developer and co-founder of Prismatic Labs. Preston, thank you so much for joining us. Love to get your technical perspective here. It seems like it's been a success so far. When will we know for sure?
Well, the merge event definitely was a success. You know, the merge is Ethereum's switch from proof of work to proof of stake. It's literally merging the proof of stake blockchain that Ethereum launched almost 2 years ago with the Ethereum mainnet. We've seen that's had consistent block production and consistent finality so far. Everything's a success. I think what we'll see over time is, do the metrics hold up? Do we continually see nearly 100% participation? Do we see consistent block finalization and a healthy network in the coming weeks and months?
You know, looking out longer term, what are you going to be watching for? Are there any potential red flags that you are going to be looking out for?
Yeah, great question. You know, with these kind of upgrades, it's really important that Ethereum stays online, right? It's a really hard thing to do. But, you know, with these upgrades, they're also so complex, right? So there's a lot of things that could go wrong. We do a lot of testing. We make sure that things are working really well before we do the upgrades. But things we're looking for, right, is making sure liveness is continued. We still have the same uptime as before. One of the cool benefits of the switch of proof of stake is that it's a much smoother blockchain. Blocks are delivered in a more consistent fashion every 12 seconds versus probabilistically every 13 seconds. So really, we're just maintaining that the software stays online, that participants are staying online, that the network is staying healthy.
How do you know when this will be successful? Obviously, the price action today wasn't all that good, and well, actually it was down today, but you did see it rising very significantly until this point overall before we really hit the crypto winter. There was a lot of excitement around this. But when do you really see the benefits of the new economy of the system?
Well, we're seeing the benefits today. The switch is immediate, right? So the energy efficiency gain that we've realized with the 99.99% more efficient model is in effect immediately today, and the prior model immediately ceased. So we already see that benefit. We see the benefit of increased decentralization. There are way more actors in Ethereum producing blocks today. In principle, Ethereum's proof of stake is working now. It is successful now, and it's running smoothly.
You know, somehow pandas, Preston, have become like the signature meme of the Ethereum merge. Can you explain that to me?
Well, it is a meme, right? So there's only so much I can explain here. But the idea was that we have like a polar bear and a black bear, and representing ETH1, ETH2, the two layers that are merging together. And apparently those two things make a panda. I'm not sure if that's totally accurate in terms of science, but it is a fun meme and a thing we really enjoy.
what comes next? This is very much, a step in a series of more steps that will presumably give more people who are related to Ethereum lower transaction fees, faster transactions. But when do you really start to see that happen?
Yeah, the switch to proof of stake has really, unlocked the next stages of upgrades. Ethereum still has a very ambitious roadmap and a very large amount of work to do in the next coming years. We see that there's already scaling through layer 2 technologies. And what we want to do there is to increase the security and data availability guarantees that Ethereum has. So what that means is to provide more data securely for things like layer 2 to provide that transaction scaling. And at some point, we'll be also working on, the idea about sharding and having more transaction throughput on the layer 1, the base protocol of Ethereum. But really, this is helping. The switch proof of stake is really unlocking all these things and helping Ethereum become a global settlement layer that it aims to be.
Longer term, Preston, how do you think this could impact the broader ecosystem, whether it's, in terms of just a lesson, the lesson that we see here, or the broader technology?
Yeah, it's a great question. I think that the energy inefficiency of proof of work is rightfully criticized by many, and that may have been preventing developers from building on Ethereum and from participating in Ethereum's network. And now that that's out of the way, we can start to see more builders and bring on more developers and continue to build interesting decentralized applications.
All right, Preston Van Loon, Ethereum core developer and the co-founder of Prismatic Labs. Thanks so much for giving us your technical view there. We're going to continue to cover the merge. Shonali, stay with us. We're going to talk about it from a crypto exchange perspective. The president of FTX US, Brett Harrison, joins us next to talk about spot trading and more. Get back to the big story in the crypto world now, and that is the Ethereum merge complete. But with the transition to proof of stake, some community participants still preferring to keep supporting the mining-based proof of work version. So a hard fork is expected to follow within hours, splitting the chain in two, which prompted some crypto exchanges to adapt, like FTX, who was the first crypto trading platforms, one of them, to launch spot trading for Ethereum proof of work tokens. Let's bring in FTX US President Brett Harrison for more, along with our crypto contributor, Shonali Bosick. So talk to us, Brett, about the dynamics at play with the spot trading here, and does this just undermine the merge overall?
So with proof of work, in order to be able to support the computational puzzle solving, in order to receive the mining rewards from the network, you have to create these giant rigs of servers that are going to solve these computationally hard problems, expend lots of energy to do so. They're very expensive. So all of these companies that put enormous amounts of money and investment into creating these mining rigs suddenly find themselves as useless in the new proof of stake post-merge world for Ethereum. So there's been a consortium of these miners that have banded together to basically create an entire fork, a copy of the Ethereum mainnet, to create their own proof of work, kind of classic version of Ethereum, and try to keep that going. Now, I agree with you that it sort of undermines the whole purpose here, which is that Ethereum moving to proof of stake means that this entire network, which is the most popular network for smart contract-based computation, is transitioning completely to an energy efficient world, and hopefully into a much faster transaction speed and lower transaction costs in the future. And this new ETH POW token isn't going to have the same property. However, the operators of this network were airdropping these tokens on existing Ethereum holders, and they're going to want to be able to claim those Ethereum tokens, the Ethereum W tokens, and trade out of them. And so we wanted to make sure that we allowed that as an exchange operator. Now, we aren't supporting deposits and withdrawals in them. We have many concerns over, actors trying to kind of put themselves in the middle of unsuspecting consumers not being completely sure which Ethereum chain they're interacting with, and as a result, basically helping kind of steal money from people who don't really know what's going on, and that's really not good. We are full supporters of this move to proof of stake. We have also supported other crypto networks that have always supported proof of stake, like Solana. And we think that's really is what the future of crypto is going to hold. But to the point that you were making earlier, on one hand, there's a concern about any potential scamming here, people moving to the wrong areas. But also, while the actual technological change worked well today, how much does something like that undermine any credibility in a system? The majority of the computational effort with regards to this Ethereum chain is happening now on the mainnet. And a very small amount of power and transactions are happening on this new ETH proof of work chain. Or, even though some mining activity has moved to Ethereum Classic and some other kind of EVM proof of work chains that still exist, everything is happening really on Ethereum. And so what we probably expect over time is for the activity on these to fizzle out. Vitalik himself has said that he expects and hopes that this will happen, and people will, basically give up the old way of proof of work, transition completely to proof of stake, because this is, a superior system in a lot of ways. And obviously, there's always trade-offs, security, reliability, speed, the kind of investment you need to get into the network in the first place, level of decentralization. And that's still open for debate between proof of work and proof of stake systems. It brings interesting questions into play with regards to Bitcoin and what its future is going to be. But we and the Ethereum community as a whole really do support this new proof of stake post-merge world. And we expect 100% of the activity to move there over time.
What's your response to SEC Chair Gary Gensler's comments on the merge in particular? I mean, he's been pretty clear, doesn't think Bitcoin falls under securities regulation, but that post-merge, the Ethereum network could.
So there are many complicated legal analyses involved in trying to decipher, which aspects of the system might be securities and which might not. So, for example, the CFTC already regulates Ether futures on multiple venues, including CME, ICE, FTX US derivatives, and it basically lays claim to that being a commodity. But perhaps the staking in such a system might be considered an investment contract of some kind, and that's really an open question. And there are multiple kinds of staking as well. There's you directly participating in the network as a validator. There's you delegating your tokens to a validator to get the rewards from staking. There's also investment staking, which is sort of none of the above, where you delegate your tokens to some sort of protocol, a DeFi protocol, which promises certain yield. All of these have different characteristics that may or may not pass the four prongs of the Howey test, and it's all an open question. And aside from the regulatory risks, there's also other risks involved in staking. For example, the price action that can occur between now and when Ethereum actually unlocks, and the fact that staked Ethereum won't unlock for people to reap those rewards for probably 6 to 12 months still. And there's operational risk involved too. If a validator fails to properly validate a block, it could have some of its stake tokens taken away. And so there's a number of risks that are still involved in the aspect of staking.
So with those risks, plus that regulatory overhang, to what extent is that a problem when you have a new model that is contingent on staking? From what I understand, FTX doesn't really offer this as a business yet. Coinbase is making it a much bigger part of their business, but there are still these big open questions about it.
The staking and proof of stake networks are a huge part of the crypto ecosystem. And while it's extremely significant that Ethereum has finally moved to proof of stake, it's certainly not the first. And in fact, most other popular blockchains, other than Bitcoin, are already on a proof of stake system. They already have this validator set up where by staking a certain amount of the token in the network, you are guaranteed some amount of the fees from the transaction and block validation rewards. And so we're sort of already very long this problem as an industry. What we hope to see is regulatory clarity and continued productive discussions with the SEC. They've been very open discussing with us and many other industry players about the possibility of offering some of these services in the future or even presently, and hopefully with a lot of movement in Congress, whether it's the DCCPA or other bills that are floating around right now that will start to get better clarity over different crypto products, whether they're considered securities or not, whether there are clear paths to registration for different kinds of either crypto lending or crypto staking activities, and that will be able to properly register these kinds of investment vehicles if they are ones, or make sure that they're not, and that they can be considered non-securities and therefore offered by exchanges such as ourselves easily.
All right, interesting. So much to continue to follow on this historic day. FTX US President Brett Harrison, thanks for breaking that all down for us, and our very own Shonali Bosick to you as well. Coming up, conversation with Margaret Vestager, European Commissioner for Competition, what she has to say about her historic win against Google next. This is Bloomberg. In a win for the European Union, a €4 billion fine, that's about $4 billion, upheld for Google's treatment of services on the App Store. Earlier, my Bloomberg colleague spoke with Margaret Vestager, Executive Vice President of the European Commission, where she is in charge of digital and competition policy. Take a listen.
This is a win. A huge majority of the case is completely upheld, which means that the court has confirmed our view. And because of that, of course, we also feel the encouragement to continue enforcing when it comes to big tech. We have a number of investigations ongoing, 3 Apple cases, 1 Facebook case, and quite a big Google case also coming up.
Does the progress that you made with regards to the Google case, do you think that actually helps you with some of the other antitrust cases that you're bringing?
Well, we get the guidance from the court on our approaches. Of course, one of the major things for us is first to prove dominance. Mm-hmm. Because if you have that kind of market power, then our rules, they kick in. If you're just a small guy, you can do so many different things. If you're the big guy, if you have the market power, then, of course, we become much more strict.
But just to be clear, though, I mean, we know that Google is going to continue to fight this as long as they can. That's expected here. Even if you end up with a victory in the traditional sense here, does the prolonging of this fight maybe give those other companies a little bit more encouragement to fight back in their cases as well?
Well, I don't see it this way. Also because we have regulation coming in to complement what we do with the case-by-case enforcement. The Digital Markets Act was just signed yesterday, so will be entering into force mid-October. And of course, there is some time to adjust to new rules, but by early 24, those who are designated as gatekeepers, real tech market power, they will have to comply to quite a number of prohibitions, but also things that they must do. For instance, share data with some of their customers.
Some of already the threats of certain fines and the upholding has changed behavior to a certain degree. And I know that, of course, the EU has said welcomed as positive some of the changes, the proposed changes, indeed, that Google has made. It's interesting when you look at some of the reporting on the Google story from US print, Boston Globe, The Times, saying they call you, well, big tech's tormentor. And I'm interested as to whether you're finding that the US is becoming a tormentor too. When you're here talking with your counterparts from a competitive perspective, do the United States back you in terms of the moves you make on some of the big companies here?
Well, I have, the first time I came to the US as Commissioner for Competition with my Google case, people say, oh, what's she talking about? Crazy woman. That has changed completely. Both public opinion, the legislator in their approach, competition law enforcement, now cases are being brought, the state's also very active. And it's part of a global development. We see in South Korea, we see in Australia, we see, around the planet, people say, come on, we need an open marketplace, we need the drive for innovation, we need people to have choices. So that has changed enormously, and of course we follow very closely what happens in Congress, and we are working very closely with our colleagues here.
And that does it for this edition of Bloomberg Technology Friday. We've got the CEO of Grindr, the new CEO, George Arison. He'll talk about his plan to take on Match and Bumble. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.